This question examines the purposes of indirect cost allocation in management and cost accounting. Indirect costs, or overhead costs, cannot be traced directly to a specific product, service, or department, so they must be allocated using an appropriate allocation base. Common costs are shared by multiple cost objects and likewise require allocation. Students should focus on the phrase, except to, which means they must identify the option that is not a valid reason for allocating indirect costs. Indirect cost allocation serves several important purposes. External financial reporting, where inventory and cost of goods sold must include allocated manufacturing overhead under accounting standards, cost reimbursement, particularly for government contracts or cost-plus agreements where allocated overhead must be justified. Managerial decision-making, such as pricing, profitability analysis, budgeting, and performance evaluation. However, allocating indirect costs does not reduce the total cost incurred. Allocation merely assigns existing costs to cost objects. It changes how costs are reported, not the total amount spent. A. Reduce total costs identified with products. Correct. Cost allocation does not reduce total costs. It simply distributes existing indirect costs among products or services. Therefore, this is not a purpose of indirect cost allocation. B. Measure income and assets for external reporting purposes. Incorrect. Overhead allocation is required to properly value inventory and determine cost of goods sold. C. Justify costs for reimbursement purposes. Incorrect. Many contracts require indirect costs to be allocated to support reimbursement claims. D. Provide information for economic decision-making. Incorrect. Allocated costs help managers make pricing, product mix, and profitability decisions. Correct answer. A. Reduce total costs identified with products. Indirect cost allocation reassigns costs but does not eliminate or reduce them, making option A the only statement that is not a valid reason for allocating indirect and common costs. This question tests the concept of the relevant range, which is a fundamental assumption in cost behavior analysis and managerial accounting. The relevant range refers to the normal level of operating activity over which assumptions about fixed and variable costs remain valid. The key phrase is activity levels over which. Students should recognize that cost behavior models assume total fixed costs remain constant within the relevant range. Variable cost per unit remains constant within the relevant range. Cost formulas and cost relationships are reliable only within this expected operating capacity. Outside the relevant range, changes in production capacity, labor contracts, equipment needs, or facility expansion may cause cost behavior to change. Therefore, the relevant range defines the interval in which the existing cost structure can be expected to hold. The question asks which statement best describes the relevant range, so students should identify the option emphasizing the stability of cost relationships, not merely changes in production or costs. Cost relationships hold constant. Correct. The relevant range is the range of activity over which the assumptions about cost behavior remain valid. Within this range, total fixed costs stay constant and variable cost per unit remains unchanged, so cost relationships hold constant. B. Costs fluctuate. Incorrect. Costs may fluctuate, but this does not define the relevant range. The concept focuses on the consistency of cost behavior assumptions. C. Production varies. Incorrect. Production levels may vary within the relevant range, but the definition concerns the range over which cost behavior is predictable, not simply changes in output. D. Relevant costs are incurred. Incorrect. Relevant costs are decision-making costs that differ between alternatives, which is a separate managerial accounting concept unrelated to the definition of the relevant range. Correct answer. A. Cost relationships hold constant. The relevant range is the span of activity over which fixed and variable cost behavior assumptions remain valid, allowing managers to use cost equations reliably for planning, budgeting, and decision-making. This question examines the characteristics of a strictly variable cost within the relevant range. A strictly variable cost changes in direct proportion to activity, meaning that the total variable cost increases as activity increases, while the variable cost per unit remains constant. The key phrase is strictly variable within the relevant range. Students should recall the following properties. Total variable cost changes proportionally with the number of units or activities. Variable cost per unit remains constant, regardless of the level of activity. The incremental, marginal, cost of one additional unit equals the variable cost per unit. The average variable cost per unit is also constant and equals the incremental cost. The question asks for the incorrect statement, so students should identify the option that contradicts these principles. The total cost of processing customer invoices will increase as the volume of customer invoices increases. Correct statement. Since the cost is strictly variable, total cost rises proportionally with the number of invoices processed. B. The cost per unit for processing customer invoices will decline as the volume of customer invoices increases. Incorrect. Under a strictly variable cost structure, the cost per invoice remains constant regardless of volume. It does not decline as activity increases. This statement incorrectly describes the behavior of fixed cost per unit rather than variable cost per unit. C. The cost of processing the 100th customer invoice will be the same as the cost of processing the first customer invoice. Correct. Each invoice incurs the same variable processing cost within the relevant range. D. The average cost per unit for processing a customer invoice will equal the incremental cost of processing one more customer invoice. Correct. For a strictly variable cost, both the average cost per unit and the marginal cost are identical. Correct answer, B. The cost per unit of a strictly variable cost remains constant, so it does not decrease as activity increases. Hence, option B is the incorrect statement.